SMC TV. Hi, I'm Lynn Rogers. Well, the topic we had planned for today, once again, we're going to put aside because there's just so much information going on, coming out of Washington right now that I think it's important to try to keep you up to date as much as we can. First of all, there is a stimulus package. That package has legislation for all kinds of things, but there are two pieces that have to do with housing. Number one is they've raised the refundable tax credit for first-time home buyers. Last year it was $7,500. This year it's up to $8,000. If you buy a home between January 1st of this year and November 30th of 2009, and you are a first-time home buyer, or you've not owned a home in the last 3 years, you could be eligible for up to $8,000 refund at the time that you file your taxes next year. Also, the FHA loan limit has been raised again. It was raised last year, then it was lowered back down, and now it's been temporarily brought back up. So if you're buying an FHA, using an FHA mortgage, your new mortgage limit is $365,000 here in the metro area. So that's a great help, again, for first-time homebuyers, because all you need on an FHA loan is a 3.5% down payment that can be a gift also from a family member. The other piece of legislation is the Homeowner Affordability and Stability Plan. That's a mouthful. That was released. They are leaking out more and more details on how this plan is actually going to work. For most Americans, the only part that's really going to affect you is that the Federal Reserve Bank is going to continue to buy up mortgage-backed securities on Wall Street. They're traded just like stocks and bonds and all kinds of other types of securities to try to keep interest rates low. That 4.5% that's been thrown out there for the last 2 months probably is not going to happen, but they're going to do their best to keep rates in the low 5s, maybe the high 4s. The rest of the Homeowner Affordability and Stability Plan is actually for families in distress, and they've given that a new subheading called Making Home Affordable. Okay, the first part of the Making Home Affordable plan is a refinance plan for families that have less than 20% equity in their homes right now. They are estimating that 4 to 5 million families may be eligible for this. A lot of you have called me the last couple months wanting to refinance, and I've had to tell you we can't because you don't have enough equity. Well, we need to talk again. So hit the comment button and let's get back on the phone and see if this is something that might be able to work for you. It has to be your primary residence. This cannot be investment property or a second vacation home. Also, you may have heard that the loan limits on these are up in the 700,000s. That is not for Minnesota. That's for high lending areas like California, probably the East Coast. It's basically the coastal areas. For us here in Minnesota, our loan limit will be the regular conforming loan limit, which is $417,000. Your home must be owned, or your mortgage must be owned by Fannie Mae or Freddie Mac. Well, how do you know that? Chances are the vast majority of you have a mortgage that's owned by Fannie Mae or Freddie Mac. But to find out for sure, we've put some links at the bottom of this video where you can just click on and put some information in, and you'll find out for sure who owns your mortgage. This is not who you make your mortgage payment to. It's who owns that security, and most likely it will be Fannie Mae or Freddie Mac, but you're going to want to check that out. There's some big questions that still haven't been answered. Number one, which banks are even going to participate in this? If they take additional TARP funds, they have to participate. But if they don't, it's going to be optional. Also, if your servicer doesn't participate, does that mean you can't do this? Probably not. It looks like they're going to open up these refinances across the board so that not only your bank can help you, we could possibly help you, other institutions can help you. Those details we're still waiting for, but it looks like that's the direction it's going to go for several reasons. Number one, because you shouldn't be penalized if your bank's not going to participate. And number two, frankly, they're going to be just jammed. There are not enough banks left, servicers, to handle the phone calls and the volume that's going to come in. So it looks like they're going to open it up so that there'll be all kinds of avenues to help families get these refinances done. Another area of the Making Home Affordable plan deals with loan modification, and the estimates are that 3 to 4 million families may be eligible to modify their current mortgages under this plan. A couple things you have to know. You have to either be in default currently or in imminent danger of default. is a question that hasn't been answered. I have heard from several sources that you have to be late on your mortgage to participate. I do not like that, and hold on, there's options for you that I'm going to talk about in a moment that doesn't require that. They're going to modify your loan down to a 31% what's called debt to income ratio. So they're going to take your mortgage payment and divide it by your gross income, and your payment will be set at 31% of that. So if you're already under 31%, you don't even need to apply because you won't get approved. There is a 6 to 9 month backlog right now with a lot of these servicers for processing loan modifications and short sales. So my question is, if somebody is in imminent danger of default or is already late on their mortgage, how are they going to hang on 6 to 9 more months to get these loan modifications through? That's going to be a real problem. Again, if your bank is participating in the TARP funds going forward, they will have to look at this loan modification for you, but if they're not, it is optional. What I'd like you to do, if you or someone you know you think is a candidate for a loan modification, click the comment button. Let's have a conversation. There are some private party companies that are handling these that are going to be negotiating on your behalf. Remember, the bank's going to be negotiating on their behalf, and they're going to have strict guidelines from the government on what they're able to do and not to do if they go through the Making Home Affordable plan. There are independent companies that are helping people with these that have a much broader scope of what they can do. So again, you can forward this to a friend. You can click the comment button. I've got details coming out. Our newsletter is just about ready to hit the mail. We've got some of these details in there also. We want to get this information to you just as quickly as we can. Thanks for watching again. I'll see you next time.